It's less than 24 hours into the new year, making this the last edition of Business Morning for the year 2020. Welcome to the program. I am Bisi Adebayo. Well, it's the last trading day for 2020, and the global oil markets are trading lower, with Brent crude down 0.15% at $51.55 per barrel, while the US WTI shared 0.19% to $48.31 a barrel. The crude oil markets have lost about a fifth of their value this year as strict coronavirus lockdowns paralyzed much of the global economy. But then prices have also rebounded strongly from their lows as government rolled out more stimulus. Brent and WTI have more than doubled from decade lows seen in April. A January 4 meeting of the Organization of the Petroleum Exporting Countries and Allies, including Russia, known as OPEC+, is set to boost output by 500,000 barrels per day in January. And back home now, President Muhammadu Buhari is expected to sign the 2021 budget into law today, and this is in line with the promise to run a calendar year budget. And this announcement comes about a week after both chambers of the National Assembly passed the 13.5 trillion naira budget and 3 days after it was transmitted to the president for assent. With the president's consent now, the bill will become law, and implementation is expected to begin in January for the fiscal year 2021. Looking at the breakdown of the approved budget now, approximately 496.5 billion naira was approved for statutory transfers and 3.3 trillion naira for debt services. Recurrent expenditure was put at 5.7 or 5.6 trillion naira, and capital expenditure at 4.1 trillion naira, and fiscal deficit at 5.2 trillion naira. Now, the legislators had urged the president to submit a supplementary appropriation bill whenever he deems it appropriate, taking into account the increase in global oil prices beyond the $40 mark. The Nigeria Deposit Insurance Corporation last week commenced the closure of 42 microfinance banks whose operating licenses were recently revoked by the Central Bank of Nigeria, and also carried out verification and payment of their respective depositors and their insured sums. Now, the exercise lasted from Monday, December the 21st till Thursday, December the 24th. And with me here is the director, the Special Insured Institutions Department of the NDIC, Joshua Etopidiok, who will be giving us updates on how claims of verified depositors were sorted and other key issues regarding insuring depositors' monies in banks and other financial institutions. Good morning, sir. Thank you for coming on the program.
Good morning, madam.
All right. Now, we know how customers usually panic when announcements like this make the news. I mean, give us details of how far the verification and payment process has gone on so far.
Thank you very much. You realize that bank liquidation is one of the core mandates of the NDIC. Having said that, to do this seamlessly, we have to work in close collaboration with the central bank. So immediately, the decision was taken that the licenses of the 42 MFBs be taken. The corporation was informed, and the necessary statutory measures in terms of gazette was received. With that, we liaised with the police and the appropriate departments in NDIC, the Claims Resolution Department, and under the umbrella of Bank Closing Committee. So examiners were assigned to the affected institutions. So they have started the process of bank closure. You know, it's going to take some days because you have to get at what we call the depositors register. You have to get the register of all the borrowers and then the stock of fixed asset. When these are put together, then we'll make another announcement for the affected depositors to file their claims. So everything is on course, and we are in time to make sure that in less than no time, the depositors will start getting their money. Remember, the maximum deposit insured coverage for the microfinance bank for now is 200,000.
So what happens to those that have above 200,000?
Once the initial 200,000 is paid, as we continue to realize the assets, collect the loans of the liquidated institutions, realize the investment that they had stock of treasury bills or what have you, and liquidate their fixed asset, more money will be given to them. But the first thing, by law, we have to give to the depositors is the initial insured amount of the 200,000. So depending on the viability of the closed institution, if assuming you had 500,000, and the cost of realizing the assets of these closed institutions, you can get the entire, the remaining 300, getting the entire amount. So it's a function of how viable the closed institution is.
Now, I want to even ask, how did we even get here in the first place? I mean, talking about these institutions that have been closed. For the two of them, I mean, what exactly is the closure? It's not the COVID-19 pandemic, because some of them are said to have closed shop as far back as 2-3 years ago. So what really happened?
Banking is like any other business. It has its own ups and downs. So when you look at the downside is when the assets of an entity is unable to meet the liabilities. So to that end, something must have gone wrong. So from our analysis, from our review over the years, the fundamental thing that creates problems for supervised entities, licensed banks, is their inability to have what we call good corporate governance. I'll break that down. Good corporate governance is the hallmark of any successful business. So you must have the right board, the right persons, thinking right, with the right management staff that are able to optimize the resources of the bank. What do I mean? Once money are collected from the customers, they are expected to be given out as viable loans to eligible borrowers. So if something is not done correctly at this point in time, that the loans given are not given to people that have the capability to pay back, because a good loan should be a loan given on the basis of cash flow, that the business will have the ability to pay back, not on the basis of collateral. So if bulk of the loans becomes non-performing, what we call non-performing loans, then it's a trigger that all is not well. So what I'm saying in essence is that the banks that are having problems are those that have issues with their corporate governance. That dovetail in they're having what we call poor asset quality, poor loans. And that will affect the ability to service the depositors, which means the poor loans affected the liquidity, the cash flow of these institutions. So by so doing, you discover that instead of the banks meeting their daily expenses based on the revenue from the business, with time they start taking money from the depositors' funds. So they will have what we call negative capital and also illiquidity. So the bank becomes both insolvent and illiquid. At that point in time, the critical threshold of capital adequacy that should be positive 10%. Such an institution will not achieve that. And also their NPL, the non-performing loans, will be above the 5%, which is the CBN's threshold for quality assets. So when such happens, you discover that there's nothing you could do. It's just a question of time. The bank will close shop. But for some of them that are able to do the right thing, they can continue in perpetuity.
But is it all about loans default? I mean, some of these banks are said to have deviated from the core mandate. I mean, the primary reason for establishing microfinance banks, which is to cater to the lower cadre of the society. But some of them are said to be, trying to compete with the big banks, so to speak. So what about this?
You see, in terms of 1, 2, 3, number one is the corporate governance issue. Number two is the bad loans. The bad loans will give rise to what we call mission drift. The microfinance institutions are expected to follow the focus of their business model, namely give loans to the retail loans to the active poor. By so doing, the business model should be such that things are done to service their market. But unfortunately, for some of them, they start booking big-ticket loans to people ordinarily who will not have ability to repay. Apart from that, that is also affecting the expenditure pattern of some of these banks. They start seeing themselves as a mini commercial banks, getting involved in big-ticket expenditure, which their revenue profile cannot carry. So over time, it's a question of time, they'll just be off the business. So that's exactly what is happening. There are a number of other issues that further hasten the demise of institutions. We talk about poor accounting controls, weak accounting system, not having the right kind of staffing mix in order to be able to predict the market, not having good strategic plan, and not having good succession plan. But top of for purpose of this analysis, the big issue is the poor corporate governance, poor asset quality that has affected the liquidity of this institution, throwing the solvency, the capital of the institution over the board.
But is anything being done to ensure that we don't have a repeat of this? Because this is not the first time. It happened a couple of years ago. So what's being done to ensure that this doesn't happen again?
In the course of our post-mortem review of some of the closed institutions, and even the live ones, we put in machinery what we call the risk-based supervision. The risk-based supervision is that supervision that potentially looks at the inherent risks that can undermine the viability of the institution. We do this jointly with Central Bank. Every year, the institutions are shared between the two institutions. So when we get into the premises of the institutions, we look at how they're doing in terms of the key issues of capital. Are they having adequate capital? The capital they are having, is it enough to carry the kind of risks they are exposed to? We look at the quality of their loan book. Also see, are they applying the necessary caution? Because there's a threshold of liquidity that a bank is expected to maintain 20%. If you are doing less than that, it's a cause for concern. If bulk of your funds is also kept in very liquid assets, that has implications for your profitability. How do I mean? Prior to the COVID-19 and the downside of reduced interest on fixed income securities, bank placements, and treasury bills, there was this kind of a hate mentality of a number of the institutions taking their money to these commercial banks. But with the sudden drop in the yield on fixed income securities and treasury bills, a number of them have not been able to quickly restructure the asset portfolio to address the essence in which they were set up, namely to create microcredits. So part of the things we do is that in the course of our examination, we raise the issue that, look, Mr. Bank, you are not doing exactly what you are expected to do. You are not optimizing your scarce resources. Mr. Bank, your asset quality is not good. You need to take a hard look at it, pursue debt collections. Mr. Bank, your capital is fast depleted. You have to put in machinery in motion to get additional capital so that you can continue operating as a going concern. So these are some of the things we are doing. And in addition, in the NDIC, because we've come to realize that the core to the survival of these institutions is to have credible, time-tested, functional risk management processes. So apart from using the flat rate way of assessing banks for purpose of their premium payment, we've introduced what we call differential premium assessment system. Differential premium assessment system speaks to that risk assessment system that is sensitive to the risks in which a particular institution is exposed to. I explain how that works. Two institutions may have the same deposit liabilities of, say, 100 million each. For Bank A that is able to manage the risks properly, maybe end up with what we call composite risk rating of low and moderate. It will pay less premium than Bank B that the risk is not well managed and is having a composite risk rating of above average and high risk. By so doing, you could see a healthy competition among the banks trying to do the right thing so that their premium will reduce, and by extension, they'll be able to service their customers profitably, and the shareholders and everybody will be happy.
Which is what everybody wants. Everyone wants to be happy, especially as we go into the new year. Well, I would like to thank you, the Director, Special Insured Institutions Department of the NDIC, Mr. Joshua Etopidiok. Thank you for coming on the program, and we want to wish you a happy new year in advance.
Thank you very much, and we also want to reassure the Nigerian public that the corporation is ever prepared to continue to discharge its mandate as a risk minimizer. We want to make sure that we stay on top of the risks supervised institutions are exposed to. By so doing, we'll deploy the best of tools available, and also in conjunction with the central bank, we'll put together what we call the National Association of Microfinance Bank Information Technology, which is a platform that have the MFBs to service their customers digitally. Thank you very much.
Thank you very much, sir. We do appreciate your time on the program. Rising inflation, job losses, low external reserves and revenues are some of the economic shocks the Nigerian economy suffered in the year 2020. Now, although fiscal and other economic policies have been introduced to manage the nation's economy at micro and macro levels, the nation slid into double recession. But here is our our year-end review on Nigeria's economy in 2020. Projections by the International Monetary Fund for the year 2020 had showed a growth rate of 3.4% for the Nigerian economy as of April 2020. But that changed following the disruptions caused by the COVID-19 pandemic, leading to lower oil prices and a shutdown of major economic activities, especially in the aviation, tourism and energy sectors. And then, only recently, the global body further announced that the Nigerian economy would witness a deeper contraction of minus 5.4% as against the 3.4% growth it projected in April. Key macroeconomic indices such as the rise in inflation, currently at 14.8%, low debt to GDP ratio, low external reserves and revenues continue to experience a downturn, but the global lender expects Nigeria's economy to rebound by 2.6% in 2021. This has also been echoed by the Minister of Finance, Zainab Ahmed.
The Nigerian GDP has declined by minus 3.62%. In real terms, that is in the third quarter, following a much larger contraction of minus 6.1% in the second quarter of 2020. Following the traditional definition, this means that Nigeria is technically in a recession.
While the lockdown took a toll on businesses, the federal government, through the central bank, embarked on measures to reflate the economy through its intervention, running into billions of naira, targeting agriculture, manufacturing and pharmaceutical sectors. This intervention seems to have assisted a great deal as businesses begin to pick up gradually.
We saw the central bank reducing interest rates on its interventions and also injecting money into the economy in line with its development function. So all this also contributed in helping supporting growth, supporting economic recovery.
The downturn has also reflected in capital inflow in 2020. A total of $1.5 billion was received in the first quarter as against the $1.3 billion received in capital inflow in the second quarter. Other statistics show that non-oil sector growth declined by minus 6.05% in real terms during the second quarter of 2020, but the Nigeria Customs Service raked in between 4 to 6 billion naira worth of revenue daily since the border closure in October 2019, while prices of food, especially rice, spiked.
Beyond just passing the 2021 budget that is expected to be around 13.08 trillion, what is important is ensuring that the revenue to fund capital expenditure is available. But right now, the challenge we have in Nigeria is that of revenue crunch. The revenue to fund our budget is hard to come by. So for the government, looking at other sources of funding our budget, especially non-conventional sources, will really be important.
The COVID-19 pandemic is still taking its toll on the economy. While many see opportunities the situation presents, especially in terms of technological advancement, the government can also tap into it by creating better environments for the people to take advantage of and improve their well-being. And when we return in just a moment, we'll be discussing today's burning issues at the commodities market. You stay with us. Welcome back. A research analyst at the financial derivatives company Desola Simoni joins us now to discuss today's burning economic issues at the domestic commodities market. Good morning, Desola. It's good to see you again as we count down to 2021. But let's begin with this one now. Curbing inflation is President Buhari's top priority in the new year, as he recently urged the CBN to ban food importers from accessing the FX markets. What are your thoughts on this development?
Thank you for that question, BC. First and foremost, it is true that Nigeria's inflation has been on the rise, increasing consistently for the past 15 months and reached a 23-month high of 14.98% in November, driven mainly by food inflation, which also reached a 3-year high of 18.3% in November. That being said, it is not the job of the president to ensure price stability or to target inflation. It is the primary mandate of the central bank. But this statement by the president also, it underscores the protectionist sentiment by the president, by this President Buhari's administration, the produce what you eat and eat what you produce sentiments by this administration. Now, there's also talks about, the president asking the central bank to ban, food importers from accessing the official market. I think that will only funnel more demand to the parallel market, which will lead to a depreciation in the exchange rate at the parallel market and will come back to food prices. On the other hand, I feel like encouraging more and more people to go to the land, according to the president, to pick up farming would not necessarily move the needle in terms of agricultural production, because most of these people will be smallholder farmers.
Desola, I'm sorry to cut you short there. We need to just fix some little issues there. We'll continue the conversation with you shortly. Your monitor is on, so it's echoing, so you need to fix that quickly. But while we wait for you to do that, let's just do a recap of the crude oil market activities at the crude oil market. Of course, Brent crude is trading down this morning. Brent crude is trading lower at $51.55 per barrel, down 0.15%, and US WTI crude was also down 0.19% at $48.31 a barrel. Now, the markets in total have lost about a fifth of their value this year, as strict coronavirus lockdowns have paralyzed much of the global economy, even though prices have rebounded strongly from their lows as governments rolled out more stimulus. And back home, President Muhammadu Buhari is expected to sign the 2021 budget into law today, and this is in line with the promise to run a calendar year budget. And this announcement is coming about a week after both chambers of the National Assembly passed the 13.5 trillion naira budget, and about 3 days after it was transmitted to the president for assent. And with the president's consent of the bill now, it will come into law, and implementation is expected to begin for the 2021 fiscal year. Let's look at a breakdown of the approved budget figures. It shows approximately 496.5 billion naira approved for statutory transfers and 3.3 trillion naira for debt services. When we look at recurrent expenditure, 5.6 trillion naira was set aside, and the capital expenditure at 4.1 trillion naira. And of course, the fiscal deficit was also seen at 5.2 trillion naira. Now, the legislators had urged the president to submit a supplementary appropriation bill whenever he deemed it appropriate, taking into account the increase in global oil prices, which has gone beyond the $40 mark. Of course, just a reminder again, now Brent crude is trading at about $51 per barrel, and it has been seen around that level in the past 2 weeks or thereabouts. All right, let's continue the conversation with Desola Sumoni talking about the recent developments at the domestic commodities market. Desola, all right, you were talking to us about the president's latest directive, talking about the CBN banning food importers from accessing the FX market. But then let's just switch to something else now, and that's talking about a recent article by the Wall Street Journal that Nigeria's cocoa trade has declined on tepid global demand due to the pandemic. What are your thoughts on this?
Thanks for that question, BC. Although we do not have official numbers to show that, cocoa exports is reducing, but we got some information from an official of the Cocoa Association of Nigeria, which said that cocoa exports is actually declining because of lower demand from Europe and North America as a result of the second wave of the pandemic. Also, information from this from the Cocoa Association of Nigeria showed that it takes around 7 days, like a cocoa laden truck spends around 7 days on the access routes to the ports before they actually enter the port for export. So these factors are affecting cocoa exports for Nigeria. And already we know that around 70% of Nigeria's cocoa production is exported. So the fact that these smallholder farmers, cocoa farmers, are not able to export this cocoa, their output is negative for them in the sense that in terms of lower revenues and lower incomes. And this is actually more acute because of higher higher food prices in the country. Now the effect on Nigeria's export earnings is quite small, because even though cocoa is one of Nigeria's largest agricultural exports, it only constitutes around 3% or less than 3% of Nigeria's total exports in terms of value.
Now, let's talk about the sale of coffee, which is one of Kenya's largest exports, and it increased sharply by 58% in September, despite the pandemic. What are your thoughts on this development, and tell us your outlook for the commodity in the near term?
So, coffee is coffee has had a volatile year in 2020, starting the year Q1 2020 on a high, but it declined sharply in Q2 2020 because of the lockdown and because of the pandemic and lockdown, which affected demand significantly, particularly coming from cafes and cafes in office areas and things like that. And in Q3, its demand began to pick up. Prices also began to pick up because of around that time countries eased their lockdowns and coronavirus infection was at the lowest in 2020. It was also around this time that Kenya experienced a sharp increase in their cocoa exports. In fact, data from the Central Bank of Kenya said that all Arabica coffee from Kenya was sold at cocoa auction. I say cocoa coffee auction in Kenya. So going forward, I think that the news of the vaccine is positive for Kenya in the sense that it signals that there may be a return to normalcy quicker, because of, even though the demand from cafes is out, the demand from stay-at-home coffee makers is not enough to make up for that. So the news of the vaccine is positive. It says that it shows that, or indicates that there's more demand. That it indicates a return to normalcy. However, news about big coffee harvest from Brazil, one of the largest coffee producers, is going to weigh on prices in the near term.
All right. Now, Gabon's sugar output was down 8.3% in the first 9 months of this year. What's the implication of this development on the nation's export revenues? And give us your outlook for sugar in the new year.
First of all, sugar is not one of Gabon's largest exports. Gabon is like Nigeria. They're also a big exporter of oil and manganese ore. So for the nation, for the country as a whole, I think the effect on their export revenues is quite small, because sugar is only a small part of their export earnings. However, in terms of the smallholder farmers, if effect on the incomes of the smallholder farmers of sugar is going to be quite huge. And the reason we saw a sharp decline, around 8.3% decline in sugar production in the first 9 months of 2020, was mainly due to a restriction of restrictions, the coronavirus-induced restriction in movement, particularly in farming areas across the world and in Gabon as well. So going forward, I think that vaccine news also is positive for sugar and says that it signals a return to normalcy, a return to having all those big sporting events which use a lot of sugar, and so essentially the vaccine news is positive in terms of resurgence in demand. However, we are seeing also big output from the largest sugar producers globally. We are seeing huge output from India, from Thailand, from Brazil, which are some of the largest sugar producers in the world. And this fact is that they are keeping a cap on the bullish run of the positive news of the vaccine. Yeah.
All right, Desola, let's talk about the Naira exchange rate now, which has depreciated to 470 to the dollar at the parallel market and 392 to the dollar at the IEFX window as economic activity resume after the Christmas holidays. But where do you see the Naira exchange rate going forward?
I think going forward, a number of factors are going to affect the Naira exchange rate. One is the external reserves. In the last 12 days, external reserves has increased by around $500 million, I beg your pardon, which is positive. Also, the news about the diaspora remittance, new diaspora remittance policy is also positive for the exchange rate. I think that will help the exchange rate to appreciate in the near term. Also, we are seeing relatively higher oil prices. Oil prices currently around $51 per barrel. We are seeing production. Nigeria's production is gearing to increase, currently around 1.5 million barrels per day, but is expected to increase. We've seen an increase in rig counts, oil rig counts coming from last week. However, demand is still low because of this rising coronavirus cases globally, as well as the new strain of coronavirus. That is going to affect oil receipts. We are also seeing things like oil FX demand backlog. Huge FX demand backlog is going to weigh on exchange rates. We are seeing things like lack or a sharp reduction in foreign portfolio investment because of the low interest rate, as well as the uncertainty about the global.
All right. All right, Desola, thank you. I'm afraid we just have to wrap up the conversation at this point, but we'll see you again in 2021.
Happy New Year.
Well, let's quickly run through activities at the Nigerian stock market and get a review from a stockbroker at TRW Stockbrokers, Abdurrashid Momo. Good morning, Mr. Momo. Thank you for joining us. Now, of course, we saw the rally continue at the market yesterday. Give us your outlook for the last trading day of the year and, of course, going into 2021. You have about a minute to do that.
Okay, basically, I'll say it's been a very good year for the market, despite all the negative, the COVID-19 issues and everything. I think basically what has helped us again was the CBN policies of low interest rates and everything, which has moved money into the capital markets. And for me, I did say it was going to be a bull run all the time, and which you've seen till date. My only concern so far is that the breakout we've seen so far are from the big players, like the ones that have the dual listings, like the Airtel, Seplat. The last breakout we did see in most of the stocks, like the banking stocks sector, like Zenith, GTB, and the rest, I had about 28 Naira, and they are not still within that range. Actually called for, I would say, caution, where calls for possibility that there's still going to be more bull rallies during the first quarter of, will I say, next week, because it's already next year. But basically what's going to be in for them is because of their year-end financials. We have, most of them have given us a good forecast of what they are going to pay. So basically, and in our market, most investors normally like the dividend period. So the next quarter is going to be very rosy for the market. That's what I have to say. But it's going to be go.
All right, we'll see how things pan out. Stockbroker at TRW Stockbrokers, Abdurrashid Momo, thank you for your time, and we wish you a happy 2021. And in less than 24 hours, the UK will be officially out of the EU as Brexit comes into effect. Juliana Olayinka joins us now to tell us how all of that is coming up. Good morning, Juliana. Of course, the clock is fast ticking as the post-Brexit trade deal between the UK and the EU takes effect tonight after it was signed into law. How are you guys gearing up?
Well, we've been waiting 4.5 years for this moment, so I think most of us have been ready. The moment is finally upon us. I believe the Queen gave the royal assent to the Brexit trade bill at about 12:25 past midnight, and at 11 p.m., so it's not midnight, it's 11 p.m. local time tonight, it is enshrined in law. On the 31st of January this year, when the Brexit transition period started, there were lots of scenes of jubilation across Westminster. Of course, Remainers weren't too happy about it, but of course that's not going to be the same this year because of COVID-19 and these restrictions. And I've got to say, if Zoom fatigue was definitely a real ailment during the year of 2020, Brexit fatigue has been a real illness in this country. So for many of us, we hope that the end of the transition would be the beginning of a new chapter in this country, to quote Prime Minister Boris Johnson.
Now, 2020 may not have been a bad year for some people after all, going by this data from Barclaycard showing Britain's independent shops had a sales boost despite an overall drop in retail spending. Of course, that's as the COVID travel restrictions and working from home prompted consumers to shop on local high streets instead of city centres. Tell us more about this.
Well, yes, this is data coming from Barclaycard, and Barclaycard, they really have the monopoly on credit and debit card transactions here in the UK. And as we come to the dawn, they have released some quite interesting data. Most of it we really know already, and we've discussed quite extensively on this programme. But what they said is that a lot of people, because of course we've been in so many different types of lockdowns, rather than travelling afar to get food and drink, local off licences and local shops have seen a surge in businesses. Their sales jumped 28.6% in 2020. That's looking at the overall picture, even though consumer spending dropped 7.1%. They also revealed that essential goods sales rose 4.1%, and non-essential food fell 11.3%. They also have a look at other sectors showing the demise of sales in department stores. We know this because, of course, the Arcadia Group has fallen. Debenhams, a pretty historic store here in the UK, that also went into administration. So department sales fell by 17.1%. And clothing has not had a great year, and their sales overall fell by 15.6% this year.
All right, Juliana, I mean, in a few hours, in less than 24 hours, everyone will be saying Happy New Year. But don't worry, we'll talk more about that in just a moment, so we'll need you to stick around. All right, it's been a roller coaster year indeed. Everyone remains thankful in spite of all that has happened, and that will be our focus when we come back in just a moment. Do stay with us.
Well, 2020, a year like no other, I must say. Here on Business Morning, we are thankful to God for seeing us through this year in the midst of the pandemic, in the midst of all the troubles and horrors on the road coming to the office. God protected us. We also use this opportunity to say thank you to our chairman and the vice chairman, whose prayers have also protected us. Thank you for your love and care. To the VC in particular, thank you for those times you called to check up on us when you heard we are all ill. For the chairman, you are like a coconut, tough on the outside, but soft inside. Like a good father, you whip us with one hand and you call us back with the other. Thank you. We love you both, and you remain in our prayers. And for the girls, BC, what can I say? Thank you so much. You've been wonderful. I mean, all the times we have to call you, even when you have to take care of your little children, you still have to show up. I know that sometimes, I can have that misunderstanding with you, but you know it's all because of the job.
Of course, it's always
and of course, to Juliana out there, you are so amazing. Thank you. Unfortunately, Eddie is unavoidably, absent here. Well, Juliana, I can see you. Thank you for being there. Thank you for always being there. Of course, we have our guys who have been with us. They are not on air, but they have supported us all this year. Where are they? Come on.
Should I clap for them?
Thank you, Ake. Yeah, I push you a lot, and you allow yourself to be pushed by a woman. Thank you. Aniete, you argue a lot with me. But it's okay. Thank you for holding up the afternoon shift. Even when you are ill, you are always there. Thank you so much. Dominic and Laddie, you've joined us in a short while, but you have made a great impact. Thank you so much. Thank you. Thank you. And for the head of president, where is she? Mrs. Rogers, please. She has given me so much trouble, but it's okay. I fight you a lot. I said, look, I don't want to do stock market. Yes, and I don't want you to put busy on the air. And then she has to do programs, and she has to read the news. It's okay. Thank you. Okay.
Well, it's been wonderful, working with you guys. You guys have been wonderful. Yes, you stress me a lot, Chimeze. She stresses me. I don't want you to put busy on the news. I don't want you to do stock market. I said, nope. I'm going to break it. He said, don't break stock market. The chairman will be furious with us if you break the stock market. So I ensure that you don't do that, even though she will grumble, but she will do it anyway. She called me up in the middle of the night. I think I don't want to do this. I said, no, you can't do that. I don't agree with you. But well, it's been great, really.
It's okay, and we really thank God. Thank you, guys. Okay, let's check. It might be a difficult year, but is a great time. We are all alive, and it's good to be thankful.
Let's hope. So don't worry, everyone. There's no alcohol in this. It's all grapefruit. So don't worry.
Okay, I'm thinking that we should hear from Juliana as well.
Yes, absolutely. And she does she have a glass?
Okay. She does. Okay, Juliana.
Thank you all. I want to thank Chimeze and Bisi and Edidiong, Joker, Laddie, of course, the chairman, the vice chairman, and so many others, including Temple, who I obviously miss. Thank you all so much. I know you guys work incredibly hard. It's been such a sobering year, a sad year, a happy year in many ways. And I think sometimes people forget just how important the business is. The business is really what's been affected the most. So thank you. I'm part of an incredible team, and I know you guys work so hard every single day. So Happy New Year in advance. To Chimeze, our mother.
Thank you. All right, and
Javed as well. I've got to say thank you to Javed. Javed is behind the scenes. Javed, come in quickly. Let the viewers see you, Javed. Come on, Javed.
Oh, yes,
that's true. After all,
yes,
Javed as our behind-the-scenes man. This is Javed.
Oh, Javed, good to see you.
He puts up with me.
I know.
I can only imagine. I mean, it's been really tough reporting all the ups and downs. It looks like it's been more of downs this year, 2020, than we've had the ups. And for Juliana, it's been all about Brexit, and all of that. And and
the COVID-19 that has been rising in the UK. And yes, she has to do the work.
Yeah, she has to go through all of that.
But 2021 promises to be good.
We do look forward to a better 2021.
A better year. Yeah. So, to everyone who have been part of our shows for the year, thank you so much. And from all of us here on Business Morning, we wish you a happy and prosperous New Year.
Yeah.
Will we cheers?
Yes. All right.
Absolutely. So